Hello, everyone. This is Ben Orshak. I'm Ben Orshak with Key Impressions, and I'm here with my friend Kevin Brill from Cornerstone Mortgage Solutions. And we're here to kind of talk about what's going on with mortgage rates. It's been about a month.
Yep.
About a month since we've done a video here on this. Last time we were on here, it was with the Fed, whether they were raising or lowering rates, and we're kind of actually back around the same time. But what's happened? What's going on with mortgage rates?
Yeah, what we've seen over the last 10 days is mortgage rates are really bouncing around.
Okay.
Getting a lot of questions about the interest rates and what's going on. So to explain that is quite simply, a lot of people think when the Fed cuts rates or raises rates, that affects mortgage interest rates. It does not. Our rates, the mortgage rates, are actually affected by the trading of bond money on the Wall Street. So when we see that going on, which lately, if you watch the news, the stock market has been going really up and down.
Right.
So a lot of things affecting the bond market. And so that means that's why we've been seeing a bounce going on with mortgage rates going up and down over the last 10 days. But what I will say is no reason to panic, because even that bouncing back and forth, interest rates still are at about a 3-year low right now. So we're still in really good shape.
Well, that's not bad. So rates have been really like one day they're up, next day they come back down, next day they're up, and you were talking about how the Fed, when they raise or lower rates, that's not a direct correlation, but it's kind of like the domino effect. Is that
correct? Yeah.
Okay.
So what happens is when the Feds say they lower rates, what generally happens is the stock market has a really good day,
right?
Which then means there's positive trading with the bonds.
Everybody's feeling good,
right?
Like, yeah,
so then it trickles down. So when
Okay.
when the bonds are doing well on trading, then we might see a little bit of a lower interest rate come out. Vice versa, when the stock market goes down, then that could have a negative impact on the interest rates. It's not usually a lot. It's not something that it really goes way up or goes way
Right.
down. It's just a little bit here and there. So one day it might be 3.8 interest rate, I might quote. The next day it might be 3.95 or something like that, 4.0.
Okay.
So it's not a big change. It's not going to make a big difference in your payment. So what I tell clients is we're still at a 3-year low on interest rate. So it's really a good time to be looking at a house and and making that investment.
Right. There are two questions. I want to get them out so I don't forget. One is, if I wanted to see what rates are doing on a daily basis, where's a place that I could go to do that? And then secondly, as far as 3.85 or 3.75 or whatever. So is that a good rate historically, or where are we at in that cycle?
No.
Whichever question you want to deal with
Yeah,
first.
first of all, where the rates are right now, we're at historically at a very low rate.
Okay.
I remember my first house years ago. My very first house, my interest rate was right at 8%. So so now, as you see, and I bought a house a few years ago that my interest rate was like almost 6%. And so now we're down to, with a good credit score, we're down to 3.75, 3.8 in that range. So, and of course, let me explain that interest rates are affected. When people ask me all the time, like, why is my interest rate higher? Because I thought they were at a 3-year low.
Right.
Well, the higher your credit score, the lower the interest rate. So that's why it's so critical that we take care of our credit score and make sure we position ourselves to get that lowest rate when we get ready to buy a house.
Okay, and I'm sorry that I got my daughter in the background there. Where, if I wanted to look at the interest rates on a daily basis and just kind of track them, where would I go to?
You can go online and look around. You have to be really careful of that, though, because there's a lot of places you can get quotes for, but what they're quoting you is a rate, and sometimes they'll throw these really low rates, but they don't tell you how much they're going to charge you in your fees and your closing costs to get that rate.
Okay.
So sometimes it's really good just to talk to a lender and get a quote from somebody local that can tell you that, because I get the question all the time, like, well, you quoted me this rate at 4.25, but I found a rate online that was 3.75. Well, what I find out is I look into it, and that other lender is charging an origination fee. They're charging points, which can be a couple $1,000s in your closing costs. So we have to we have to make sure we're comparing apples to apples on that.
Okay.
So don't be lured into some of the things you see online, these teaser rates we call them, because there's fees usually attached to that.
Right. Well, that's good. That's good advice right there. Go figure. What you see online may not be reality.
Yeah.
hey, who knew? But as far as mortgages, right? So there's like FHA, there's VA, there's conventional. What is like? What are you seeing as far as your business is? Like, what kind of product is unique, and what kind of product is I guess really active? People are using right now.
Well, one of the most unique products we have right now at Cornerstone Mortgage is we have a conventional renovation type loan. And what that means is FHA also has a renovation loan, but conventional means, because on a conventional loan, you can buy a second home, you can buy an investment home with a conventional loan. Well, with the renovation loan that we're doing under conventional, so if you're buying an investment property and let's say it needs some things worked on, we can actually take those renovation costs and roll it into your loan and basically finance that into one payment. So that's a huge savings and a huge help, because if there's say a house is needing some work done and it's going to cost maybe $20,000 to $30,000, you can actually have that $20,000 to $30,000 rolled into the loan, and then you got that one payment.
And you can save it. You can save the mortgage insurance as well, because I mean, just my experiences with the FHA, and I'm paying mortgage insurance even if my value in the home is below, like, I don't know, I think it's like 75 or 80%. I'm still paying. So you can avoid that.
Yes, because on the FHA loan, the mortgage insurance is on there for the life of the loan. On a conventional, once you pay it down to where you only owe 80% of the loan, that mortgage insurance falls off your payment, which means your payment's going to go lower.
That's nice.
Yes.
That's cool.
Yeah.
Where can somebody, if they've got further questions and they want to talk to you, how do we get a hold of you?
Very easy. You can either call me. My number is 850-712-8586. Or you can email me, and it's real simple. It's kevin@choosecornerstone.com. So it's kevin@choosecornerstone.com. Available 7 days a week to answer questions.
Yeah, that's awesome, and that's true. Just to kind of put a plug in, because he's not going to say it. He is very accessible, and one of the things that I like about local lenders is having the peace of mind of knowing that I can pick up a phone and I'm going to get a hold of him. I can email, and I know that I'm going to be responded to by the end of the business day at the latest. And some of the big box, it's hit and miss. And when you're dealing with a mortgage and dealing a purchase of your house, especially, I mean, well, any house, whether it's your first house or 80th house or whatever, that's good to know that I can talk to somebody directly, and I don't have to wonder if I'm going to get a call back or an answer that day. So, hey, thank you for your time.
Thank you, Ben.
All right.